Okay, Sunday the 10th of Feb, part 2, stock markets. Emini S&P. Right, 200-day moving average held it. Thought it would. We got pretty close. I had the low 40s as a selling opportunity. Unfortunately, we didn't quite get there, so you'd have had to have jumped into a short early. Now, we came off on Thursday, little bounce back on Friday. I don't think this is going to collapse for some reason. Now, I did think it was going to collapse in December, and as you know, I did a little trade where I bet $2,000 on it and made 30. So I got that right, but for some reason I don't think it's going to collapse here. I don't know why. I think we're just going to, we could go down 100 points. We could easily get to the low 26 area. So I wouldn't rule that out, but I just don't think we're going to go down in a sharp straight line like we did in the beginning of December. I could be wrong, but anyway, if we head lower, look for support in the low 2600 area. We've got 500-day moving average at 2618. And on the daily chart, we've got some good support down there. Sorry, weekly chart from trend line, 100 week moving average at 26.28. So I don't know, 26.30, 26.10 is maybe where we could get to, which is a decent profit if you are short. And I do fancy a move to the downside. I do think we can go lower. Just read the report, keep an eye on my levels. We can move in and out of short positions. Because obviously it won't go down in a straight, well, I don't think it'll go down in a straight line like it did in December, beginning of December here. I think it'll be more of a choppy affair. Anyway, that's it. I think, let's have a look at the other markets. The Dow Jones actually beat the 100 and 200-day moving averages, and that is now working as support. As you can see, we closed above them on Friday, so this is another good reason why we could have a mixed picture with the stock markets and maybe not actually collapse. Yeah, as I say, Dow Jones actually looks quite positive. We're not even that overbought. Well, no, we are overbought. Why am I saying that? But we've got some negative cross. I'm not going to pay too much attention to the stochastics. Let's have a look at the weekly chart. What's that telling me? Yeah, see, this looks quite positive. In fact, so mixed picture for the Dow Jones and the Emini S&P, and that's why I think we'll probably trade sideways to maybe a little bit lower, but I don't see a big dump coming. Nasdaq's a fairly similar picture to the Emini S&P in that we did halt just below the 200-day moving average. Oh look, we had the 61.8% fib as well on the daily chart. So yeah, not some resistance for sure, and it did reverse as I expected it to. But a good bounce on Friday, like the Emini S&P, with quite a bullish candle. So yeah, this indicates that the market isn't really going to collapse. I'm saying the same thing over and over again, but that's just my theory. So I think we just trade in and out. Look at the levels on the reports if you like trading the stock markets, and be nimble, get in and out, try and keep banking profits. DAX pretty much moving in the opposite direction to the US stock markets. DAX really couldn't follow the US markets higher, halted at the 100-day moving average, and then collapsed into the end of the week. So again, moving averages working quite well. The 55-day had worked quite well here at least. 100-day moving average put an end to the rally. This looks quite negative. It really does look quite negative. I don't see this trend line as even being that important anymore, so I'm going to take it off. That was my inverse head and shoulders pattern, which kind of played out. But now this looks pretty nasty. I could throw some fibs on here just to give us a guide as to where we are. Okay, we broke the 38.2. So yeah, this just doesn't look good really. DAX hasn't looked good for a while, has been unable to follow the US markets higher. Yes, sorry. I'm completely forgetting what I saw on the weekly chart, which I'm pretty sure I told you last week. We had the neckline to the head and shoulders at, what's that green line? Yeah, 11,400. Where did we get to? 11,385. So yeah, if you remember, I was talking about that neckline to the head and shoulders being important resistance, plus the 200-day moving average at 11,469 at the moment, and we were unlikely to get through there. Well, we didn't get through there, and we just collapsed. So this really is quite a negative outlook for the DAX. This trend line goes back a very long way. I think it's a 10-year trend line or something, so we've closed below that as well. All looks pretty nasty. FTSE's been interesting. We had a lot of resistance around the 69.5 level. We burst through it and we rocketed high, which was supposed to happen, up to 71.24, just below this peak at 71.48. And we've now returned to the 69.5 area, support area, from the Fibonacci 38.2, the trend line, which goes back to, let's have a look, Trend line goes back to quite a way back actually, at the end of 2016. So that's a good 2-year trend line, and we've also got the 200-week moving average. So this is all sort of 69.55, 69.30 should now be the support area, of course. Where do we get to? 7,000. Okay, so we've got another 50 to 80 points on the downside before we hit support, and maybe reverse from there and head higher. This doesn't look too bad. We could just hold the 100-day moving average at 69.83 and turn higher. Right now the FTSE looks okay.